Fighting the third COVID wave and high base effect, India Inc. continued to clock a healthy quarterly performance in Q3 of FY22. Data compiled by Business Standard shows that combined net profits of 3,191 listed companies zoomed 26.9% year-on-year, while their net sales increased 24%. The reported combined net profits of Rs 2.39 trillion in Q3 FY22 were up from the Rs 1.88 trillion a year earlier, but down marginally from the Rs 2.4 trillion in Q2 FY22. Meanwhile, top line or net sales growth was higher in the recently concluded quarter than in Q2 FY22. This was especially true for the non-financial companies which are facing the brunt of inflation. Trend analysis by global brokerage Jefferies points out that IT companies reported strong revenue growth with a positive margin trend, while private banks clocked sequential loan growth and improved asset quality. Further, consumer staple companies saw mega volume growth due to weakness in rural margin but managed to support EBITDA on price hike. Auto companies too reported significant sequential EBITDA improvement on price hikes. Lastly, insurance and real estate companies reported strong top-line growth, but pharma companies' US generic pricing saw price erosion of near double digits. That said, earnings growth in Q3 FY22 were the lowest since Q2 FY21 quarter due to a combination of subpar top-line growth and decline in margins. The combined net profits of non-cyclical companies were up just 1.8% year-on-year in Q3 FY22, growing at their slowest pace in the last 6 quarters. Going forward, analysts remain skeptical about India Inc.'s earnings performance. A poor showing by non-cyclical sectors could hurt the corporate earnings, but the downside may remain capped if the RBI's inflation projection of 4.5% in FY23 is met, which could mitigate cost pressures. Let's go to Siddharth Khenka, Head Retail Research at Motilal Oswal Financial Services, to know what cues should investors track for the upcoming quarters.
Some of the key companies within Nifty which have reported strong numbers are Bajaj Auto, Maruti, Ultratech, HUL, among the banks and NBFCs, Axis, ICICI, Bajaj Finance. They reported better than expected numbers. On the other hand, companies like Tata Motors, Asian Paints, Dr. Reddy's, BPCL, they reported lower than expected numbers. So the key thing to watch out for is that companies, they delivered on the earnings front despite the unprecedented inflationary pressure arising from commodity and energy prices. So as I said, that the outlook on earnings have not changed after the quarterly results. So we expect a strong earnings growth recovery in the Indian corporate sector to continue. Some of the sectors which were impacted because of the inflationary pressure have managed to pass on the price hikes, although they have taken a hit on the margins as well as volume growth. Any improvement in that will only improvement in the commodity prices, softening of commodity prices will only help accelerate the profit growth for Indian companies going forward. Banks and NBFCs have started showing recovery. That's a good trend to watch out for. That's a sector which has underperformed and can be a sector in focus. Given that globally the interest rate and liquidity will be key factors that will be driving the equity markets globally. Further, we had the Union Budget, which focused on revival in growth by boosting capital expenditure, enhancing budgetary support for a lot of sectors. As I said, overall, if you look at the market, the recent correction of 4-5% from the top, Nifty is trading at about 20 times FY23 PE, which looks reasonable given the growth expectation and at the economic cycle that we stand at. So looking at that, some of, as I said, sectors that can do well from an investor perspective over the next 6 months to 12 months are banking and financial, IT, consumer, metals, cement, while autos could remain under pressure because of the higher commodity prices as well as supply chain issues with the chips. So that's the overall picture that comes out after the December quarter earnings.
In a nutshell, analysts have retained their earnings outlook for now, but they will closely monitor commodity prices and how the companies will balance price hike and volume growth. On Thursday, global market sentiment amid Russia and Ukraine standoff will guide the market sentiment. That apart, weekly F&O, stock-specific news and commodity prices will sway indices.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.